John Alfred Paulson, born on December 14, 1955, is an American hedge fund manager and billionaire. He is the founder and leader of Paulson Company, an investment management firm based in New York that he established in 1994. Paulson is renowned in the world of high finance, often described as one of the most prominent names and credited with making one of the biggest fortunes in Wall Street history. His breakthrough came in 2007 when he earned nearly $4 billion by successfully betting against the U.S. subprime mortgage lending market using credit default swaps. This transformative success catapulted him from relative obscurity to legendary status in the financial world. In 2010, Paulson continued his winning streak, amassing $4.9 billion in earnings, further solidifying his position as a financial powerhouse. In 2015, his net worth was around $11.2 billion, which was his peak net worth. As of January 2023, Paulson's net worth is estimated at $3 billion, according to Forbes' real-time tracker, a testament to his enduring influence and success in the world of finance. John Paulson, born in Queens, New York, came from a diverse family background. His father, Alfredo Guillermo Paulson, originally from Ecuador, had a multicultural heritage, while his mother, Jacqueline, was the daughter of Jewish immigrants. Alfredo's early life was marked by tragedy and resilience. Orphaned at 15, he immigrated to the United States with his brother, eventually serving in the U.S. Army during World War II. Later, he adopted the surname Paulson. Jacqueline's family roots trace back to Lithuania and Romania. She met Alfredo while both were students at UCLA, and they settled in New York City, where Alfredo pursued a career in finance. Recognizing the limitations of his initial career path, Paulson returned to academia. Excelling in his studies, he graduated at the top of his class with a degree in finance from NYU's College of Business and Public Administration. Subsequently, he pursued further education at Harvard Business School, where he earned an MBA with honors. Paulson embarked on his career at Boston Consulting Group in 1980, engaging in research and providing strategic counsel to businesses. Eager to delve into the world of finance on Wall Street, he transitioned to roles at Odyssey Partners and later Bear Stearns, gaining valuable experience in mergers and acquisitions. In 1994, Paulson took a significant leap by establishing his own hedge fund, Paulson Company, with modest initial capital and staffing. Initially based in rented office space, the firm experienced steady growth, relocating to a prime location by 2001 and managing assets worth millions by 2003. Paulson's investment strategy primarily revolves around event-driven opportunities such as mergers, acquisitions, and proxy contests. Over the years, he has executed numerous successful investments in this domain, including lucrative merger arbitrage deals and strategic proxy event plays like the Yahoo proxy contest in 2008. Paulson achieved remarkable success in 2010, setting hedge fund records with nearly $5 billion in profits, largely attributed to investments in the gold sector. However, subsequent years saw setbacks, with losses incurred in investments in major financial institutions like Bank of America and Citigroup, as well as controversies surrounding companies like Sino-Forest Corporation. Despite challenges, Paulson remains a significant player in the investment world, particularly in the gold market. In 2007, Paulson gained worldwide recognition for his foresight in predicting the subprime mortgage crisis. Recognizing the vulnerabilities in the U.S. housing market, he took a bold stance by shorting mortgage-backed securities through investments in credit default swaps. This strategic move proved immensely profitable, earning Paulson's firm billions of dollars, with his personal earnings exceeding $4 billion. Paulson collaborated with Goldman Sachs to address liquidity challenges in underperforming home loans across several states, including Arizona, California, Florida, and Nevada. Together, they devised the Abacus 2007 AC-1 investment vehicle, concealing Paulson's bearish bet on the underlying assets from the vehicle's buyers. Despite controversies, Paulson's firm maintained transparency about its perspective on the securitized mortgages, emphasizing the inherent risks associated with these assets. The collaboration with Goldman Sachs attracted legal scrutiny, particularly regarding the transparency of the Abacus investment vehicle. While Paulson's firm avoided indictment by asserting its transparency stance, Goldman faced legal action from the Securities and Exchange Commission, SEC. Eventually, Goldman settled the case out of court in July 2010, agreeing to pay a substantial penalty of $550 million to the SEC and investors. This settlement marked one of the largest penalties ever paid by a Wall Street firm, highlighting the regulatory aftermath of the subprime mortgage crisis. John Paulson serves as the founder and CEO of Paulson Co, an investment management firm headquartered in New York. Specializing in event-driven investments, the company has flourished under Paulson's guidance, attaining significant success in the financial industry. Between 2000 and 2010, Paulson contributed a significant amount, totaling $140,000, to various political candidates and parties. Notably, his contributions were distributed across Republicans, 45%, Democrats, 16%, and special interests, 36%, including former House Speaker John Boehner. In 2008, Paulson co-authored a Wall Street Journal op-ed proposing an alternative approach to stabilize the markets. This plan suggested utilizing the Troubled Asset Relief Program funds to recapitalize troubled financial institutions by purchasing their senior preferred stock rather than focusing on acquiring their worst assets. During his testimony before the U.S. House Committee on Oversight and Government Reform in 2008, Paulson expressed his belief in the fairness of the tax situation, particularly regarding the low tax rate on long-term capital gains and carried interest earnings. He emphasized the significant tax burden faced, particularly in New York, and suggested that jurisdictions should value successful companies like his. Paulson has been actively involved in political fundraising, donating $1 million to Mitt Romney's Super PAC Restore Our Future in 2011 and hosting a fundraiser for Romney's presidential candidacy in 2012. He also backed Donald Trump's presidential campaign in 2016, serving as one of Trump's top economic advisors. In 2017, Paulson and his wife took a stance against what they perceived as anti-white indoctrination at the elite Manhattan Spence School. They emphasized the importance of academic rigor, hard work, earned accomplishment, and personal integrity, threatening to withdraw aid if the school continued its alleged pattern. In support of Donald Trump's 2020 presidential campaign, Paulson and his spouse contributed a substantial sum, totaling $831,370, underscoring their ongoing engagement in political affairs. Between 2009 and 2011, Paulson made significant charitable donations to various causes, including $15 million to the Center for Responsible Lending, $20 million to the New York University Stern School of Business, resulting in the naming of an auditorium after Paulson, $5 million to the Southampton Hospital on Long Island, $15 million for the construction of a children's hospital in Guayaquil, Ecuador, and £2.5 million to the London School of Economics for the establishment of the John A. Paulson Chair in European Political Economy. In October 2012, Paulson made a historic donation of $100 million to the Central Park Conservancy, marking the largest monetary contribution ever made to New York City's park system at the time. Additionally, in June 2015, he donated $400 million to Harvard University's School of Engineering and Applied Sciences, SEAs, resulting in the school being renamed the Harvard John A. Paulson School of Engineering and Applied Sciences. Paulson has shown a commitment to education through his philanthropy. In June 2015, he donated $8.5 million to New York City's largest charter school organization, Success Academy, with the aim of improving public education and establishing middle schools in underserved areas of Brooklyn and Manhattan. In 2022, New York University announced that Paulson had made a generous donation of $100 million towards the construction of a new building on its Washington Square campus. The building was named the John A. Paulson Center in recognition of his contribution, further demonstrating his commitment to supporting educational institutions and their initiatives. In 2000, John Paulson married Jenny Zaharia in a ceremony held in Southampton, New York. Jenny, originally from Romania, immigrated to the United States following her brother's defection from Romania. The couple has 2 daughters and primarily resided in a spacious Upper East Side townhouse in New York City, along with other properties including a home in Aspen, Colorado, and an estate in Southampton, New York. In September 2021, Paulson filed for divorce from his wife Jenny. However, he later withdrew the divorce action to facilitate negotiations outside of court and away from the media spotlight. As of January 2024, The divorce proceedings between John and Jenny Paulson were ongoing. John Paulson has an older sister named Theodora Bar-El, who is a biologist based in Israel. John Paulson gained immense recognition for his remarkable success in Wall Street history by shorting the U.S. housing market during the subprime mortgage crisis. This strategic move earned him one of the largest fortunes in Wall Street history. In 2007, he earned nearly $4 billion, followed by $4.9 billion in 2010. As of January 2023, his estimated net worth stands at $3 billion. Paulson's exceptional achievements have earned him widespread acclaim in the financial world. He has been honored with various awards and accolades, underscoring his significant contributions to the industry. Bloomberg Markets recognized him as one of the 50 most influential people in finance in both 2007 and 2008. Furthermore, Forbes ranked him as the highest-earning hedge fund manager in 2010, further solidifying his status as a leading figure in the financial sector.